Welcome to the StockMatter.com studios here in the Black Hills of South Dakota. I'm your StockMatter Brian Johnson, making professional trading simple and a relatively flat day in the markets. The Fed came out and spoke, and after he spoke, that's when we saw all the action. It went, well, it didn't go anywhere, it went sideways. Nothing happened. He did exactly what most people expected him to do, and that's keep rates unchanged. I don't think that was a huge surprise. That's only what he's done with the last umpteen times, and that's exactly what everybody's expected. So, no change there in the rates. However, we did have a gap up to start the day, so that does put our price back up above the support areas we had been watching. Remember, we looked at this 200 on the 60-minute, talked about the 10,950 area. That did not even come close to being broken today since we wandered sideways, which, had you been watching yesterday's video, I did make mention that I wouldn't be surprised if that's exactly what we did. And that's exactly what we did. Just a consolidation day. We wandered sideways most of the day. Hope you guys weren't too taken aback by that. I talked about that yesterday. And that's very common when we get down to these larger areas of either support or resistance. It's pretty common to see that. One thing of interest is we finished just above the 20-day moving average. So the 20-day wasn't actually able to hold. However, it only held by what, 7 points. So call it what you will. It did, it didn't. It's on, whatever. It's right at or around the 20-day, but if we want to split hairs here, it is above the 20-day moving average. So the bull's getting that back again. Maybe we wander up again, start to create. I talked about this, a potential head and shoulders pattern again. None of which have really worked out all that well. So I wouldn't put a lot of emphasis on it. 60 minutes have had a lot of head and shoulders on the way up, and none of them have really worked out. So, just a flat day in the markets, consolidation, waiting for the next move to happen. I'm still waiting for those levels to be broken, though. So, today we did see the NASDAQ struggle a little bit. It did dip, 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 and couldn't really close below the 2,000 mark. We did see it get down there and 1, 2, 3 times try to break below it. I mentioned, watch it at 1990. If it happens to do that, we saw that it broke below it, and 1992 is really what the low was. So those levels held very well in the bigger picture. If we look at the daily, you can see where it's holding, and that is 2007.25, 2007.59. Funny how these little green things work. So the 20-day moving average holding nicely in the NASDAQ so far. It is finding support at, on, or around it for the time being. My break is still below that 2,000 mark. Intraday traders once again be watching the same type of levels. But I think if we start to head down again from here and break 2,000 on the NASDAQ, I'm speculating here, but my gut would tell me that it's going to hold this next time. If we break back down below 2,000, I believe we will get a daily close below 2,000 at that point. So there's my Brian Johnson crystal ball speculative play coming into the next few days. On a weekly, still trying to hold itself up here. We only have here a couple days left in the week. It's got some work to do if it's going to get all the way back up to the top. Maybe once again some earnings and stuff, but I think it's kind of spent itself out there. So I'll be watching to see if we roll sideways from here, if we break those larger levels. Once again, the charts are going to tell me what to do. I'm just going to let them tell me what to do, but as it stands right now, I'm just waiting for these larger levels to be broken, like 2,000. Otherwise, I don't know. I wouldn't be looking for a more major long until it got back up above 2050 or so. SPX on a 60-minute, also bouncing back up, finding support back here at the 1190 area. Staying above the 200. Look at how big red's holding here, man. This thing's rolling through, and it's just holding it back. 1180 is still my bigger number to get below. That now that might act too as a fake below and then a back up. So below 1180, you might want to just be careful the first couple of times, first couple approaches. Not saying don't trade it, just saying be careful if you do get short below 1180 on its first attempt. From a daily standpoint, coming back up now, this is interesting. What did it do? Yes, it did. Close below the 20-day moving average. So I'm going to give the bulls about one more day to get this thing back up and above the 20-day, and if it can't make it, the bears might have something here. still, once again, looking for larger breaks below 1180. On a weekly standpoint, Wednesday got a couple days left, but holding this 1224 area and the blue line very nicely as it stands right now. VIX on a daily, this was down again. However, look at the huge move we had yesterday. So a 30-point move up, or whatever it was, 30% move up, whatever we had yesterday, kind of helps negate the whole 7 or 8% move we had down today. We have seen this in the past, so look how we move upwards very quickly, and then we just bleed to death on the way down. Move up very quickly and bleed to death on the way down. All of these little larger white candles have been met with consistently lower levels on the VIX. Everybody will be watching to see if this spikes in the next day. Maybe there's some sort of Greece news or something that comes out. But looking at the VIX above 23, that would certainly mean lower prices in the indices. So fear, I would say, I've been saying, oh, there's no fear, there's no fear. Okay, there's a little bit of fear. There's a little bit of fear here. So we're going to continue to watch this, see where the weekly ends up at the end of Friday. But I would definitely start to raise my levels. So we're like DEFCON 3 now, maybe starting to move up a little bit. Apple on a 60-minute was down 44 cents today, but you can see it moving down very slowly, right back into a very strong support area, holding nicely, taking a bounce off of there. So watch it below 257. 257.50, 257, somewhere down in there. That might make for a pretty decent short. It might try to then close the gap, and that's quite a spill. Remember, guys, that was the big earnings move. So we start to break back down below this area. We could be looking at a 252 to a 245 type of a move in Apple. Look at that. The blue line's holding. So we did have a move below it, tried to pull itself back up. It's on below the line, whatever. Looking for more confirmation by the bears to see if this is going to, sustain itself over the next day or two. We have one close below it. I always look for a couple just to be on the safe side. So we'll see if Apple comes back tomorrow. Did have a nice bounce back here at a support area. So we'll see if the bulls can pull that up ever so slightly. But I'm going to be watching this blue line very closely. That is kind of been my line in the sand for Apple for a while, even after earnings with the major move up. Bigger picture, weekly, not looking too scary on Apple. Right now, just looking like a pullback. ABV on a 60-minute was down another 1% today. We did get a break below. First of all, for those of you that took a short at 100, fantastic. I'd hold on to it here. We are now below the 20 and the 50 and this lower support. So if you want in on this thing, you still have an opportunity, but it has to get, I'd say, below 95. Below 95-ish somewhere before you start looking to go short. Long, not till it's above 100 on ABV. We've already kind of had our entry there, so short is about the only direction on that one to watch. APEI creeping its way upwards, but looking more and more now kind of on a 60-minute like a bear flag, so we still might have some more downwards motion to go. This was a great play to the downside. If you're still in this thing, anything back up and above 45, I would not want to be short at that point. Below 43 is still a good entry, another re-entry to the short side. FAS on a 60-minute up $3.77, but still hanging out at this. What? Oh, look at that. Supported 100. Go fig. Low of 99.42, so it did dip its toe below it, just wasn't able to hold it. This was interesting yesterday that we got a close below it, and notice how it gapped up today and quickly got back above that 100 number. So once again, this is still really meant for day trading, guys. From a swing trader standpoint, there's nothing here to swing trade at this point. And for those of you that might be wondering, when I say swing trade, I mean you're going to hold overnight. You're going to hold for 1 day to maybe 2 weeks or a week or something. A day trade means you're in and you're out same day. Swing trade means you're going to hold at least overnight. So in case some of you are wondering, have been watching the videos, those are the definitions there. FAZ on a 60-minute was down 47 cents today and holding above this support line here for at least another day. Still an intraday type of a trade. Above 13, I think that might be worth maybe getting in and then holding for a day or two. But as of right now, it's still chop. Look at this. I can contain price from about, 1260 down here to about 11. It's just kind of chopping sideways. I do not like taking any kind of major stance on stocks as they chop sideways. That'll do it for today's video. Let's wait and see if we get this little hop up here to retest these moving averages tomorrow. Um, Otherwise, my more major levels are still in play. Below 10,950, below 1180, and below 2,000 on the indices. All right, we'll see you in tomorrow night's video for my subscribers. Hang around. I'm going to do another video for you guys next and let you know how I'm trading, where I'm trading, and where my entries are going to be for the next move. See you guys in a little bit. Bye.